My name's Adam Deller and I'm here to talk about the lease standard, IFRS 16. Now, for financial statements beginning on or after the 1st of January 2019, the new lease standard is now applicable. And there are many changes to do with sale and lease back. There are some slight tweaks to do with disclosures, but really the big change is how lessees account for these leases. Traditionally, firms would either have an operating lease or a finance lease. But now that distinction's been removed, and all lease agreements, with the exception of short-term or low-value leases, have to recognise an asset and a liability. And that means the accounting treatment is sort of similar to what they currently have for finance leases. Now that will relate to big changes in businesses. Okay, a lot of entities will now have assets and liabilities brought onto the statement of financial position which previously weren't there. A PwC report estimates that the median increase in debt will be about 22% across all industries. Now, some industries will be far more affected than that. They estimate that the retail industry may go up as much as 98%, and the airline industry around 40%. And that will have big implications on gearing, which will increase, on return on capital employed, which will decrease. It would also change things like the current ratios, which would also decrease due to the introduction of these liabilities. On the flip side of that, operating profits may actually increase, because instead of having an operating lease expense simply in operating expenses, now you'll have depreciation, but you'll also have finance costs which will go below the line. And the PwC report estimates that EBITDA will actually increase on average by about 13%. The retail industry going up by about 40%. So there'll be a slight increase in some of the measures that firms report on. The overall profits may not be massively changed, but some of those key measurements will be. So that might mean that some loan covenants maybe need to be redrawn. Some providers of finance may need to have meetings with their clients in order to discuss how that's going to look under the new lease standard. But the aim of IFRS 16 is to really remove the judgment between operating and finance leases and make financial statements between entities a lot more comparable.